We're seeing 94% collapse in tanker transits. This is the Hormuz. Geopolitical frictions become a structural tax on every ledger on Main Street. When you pay more at the pump, you aren't just paying for oil, where your assets end up and who gets control of it. And this is what people don't realize either. Your money is going to go somewhere. Maybe it's going to go to someone you don't want. Maybe it ends up going to the state. Maybe it goes to the people you actually wanted to go to. Maybe it goes to debtors. You know, that's not the people you want to go to. What's up, Main Street? Welcome to the Global Square. Maybe 9, 10, 11 p.m., a.m., depending on where you're listening to. But I'm down here in Charlotte. The Wall Street is south. Whether you're winding down your day or waking up in Tokyo or Seoul, the scoreboard never turns off. Before we get into the math, I want to take a moment to acknowledge the friction we're all feeling. We look at the headlines and see growth, but we look at our receipts and see inflation. We hear about new records, yet we feel a growing sense of instability. This isn't a coincidence. It's the gap between the building blocks of finance and the mechanical reality of the world we live in. Second, we're going to take a look at it. The bottleneck, Strait of Hormuz. Give me a second, we'll pull it up. But this isn't theory, it's a bottleneck. We're seeing 94% collapse in tanker transits. This is the Hormuz paradox, where geopolitical frictions become a structural tax on every ledger on Main Street. When you pay more at the pump, you aren't just paying for oil, you're paying for the friction of a world in transition. But tonight, we're moving beyond the building blocks. We're moving past the dating phase of investing. And to the 1,300 professionals who subscribe to the Wall Street South Journal, you aren't here for a tip, you're here for a system. Also, to the people listening to the Main Street Meets Wall Street podcast. Tonight, we're performing an autopsy on the advice that was made in the headlines, from stuff I quoted with Business Insider all the way to the things I reviewed with the Wall Street Journal. Show you how to execute when the stakes are high. When the stakes are this high. Let's start with the dual reality of a winner and a milestone. Levels. Let's take a look at our screen here, and we see right here, this is the Strait of Hormuz, and this is actual live traffic. But what you notice is there's not much traffic. Like I said, 94% of this is actually closed off right now. So while you see these things, while you see these tankers sitting here, and this is the little part that's holding everything up. Right around here. We've had some tankers come through closer on this side, but over here, the Iranian side, we're not seeing much movement, or we're not seeing much movement at all. And this is putting pressure on oil, like I said in the opening, and oil just presses down everyone. How are you feeling, Main Street? Are you feeling the pressure at the pump? I know gas was around $4.50 a gallon nationally. I did a deep dive into that stuff on a recent video. I just released this weekend. If anyone wants to take a look, just go back and check it out on my YouTube channel. And also did a bonus podcast edition. Today, like I said, we're just looking. Look at the Strait of Hormuz. Look at where we're at. Look at how we sit right now. Nothing's moving through. And these things aren't like, this isn't just a pipeline that you can turn on and off with just exceptional speed. It takes time. There's been damage to the infrastructure over there. There's been damage to relations over there. We have President Trump, who's going to China tomorrow. He's flying over to talk to President Xi. President Xi, hopefully I'm sure they'll talk about the Iranian war. But I think one of the things that the president had mentioned, President Trump, is that he didn't want ongoing conflict. So we see today where Iran sent back a response to our 14-point peace proposal, and the president's response was that it was unacceptable. So there's not any movement there, but it does seem like both sides want to keep the ceasefire, quote unquote ceasefire. There have been shots fired. Ceasefire, they want the ceasefire to hold. We know that, like I said, this is a major economic cost to everyone on both sides and globally. So that's another reason why this meeting with President Xi could be so important. When you go over to China and you have Trump over there, and we'll see some of the concessions maybe they're making. I think I heard one of the speeches that one of the things that may be a talking point is President Xi wants Trump to, it's the way that we frame Taiwan's independence. We don't particularly support it or verbalize, or we don't deny it. I think Xi wants to push Trump closer to denying it. But that's just the geopolitical things. And I bring this up because as we look at the Strait of Hormuz here, me and Mr. Stephen Davenport last month sat back and we were talking about the possibility of a closure of Strait of Taiwan. And that would actually not have as much of an impact on oil as it would into the actual AI trade and chips, because a lot of chips come from Taiwan and Taiwan semi. So when you're looking at chips and you're looking at going into places over there, and if there was, and say China's looking at this as a playbook for possible U.S. conflicts or how U.S. would respond, but that's at this point that's just conjecture. We haven't seen anything new that points to China trying to to take control of Taiwan, anything more than we've seen before. So if you want to know why your gas prices are sitting, $4.50 a gallon, depending on where you're at, it's because this stuff right here is not moving. And that's a very tiny place right there, just a couple miles wide and not very long, like 20, 21 miles wide long. So you sit there, you look at Strait of Hormuz, you see all the red, the stuff not moving, oil tankers not moving. So just hold on. I mentioned in the last video as well that you have oil futures that are pointing out for higher for longer. Oil this morning and earlier today was trading, right about $100, above $100, depending if it was Brent or West Texas Intermediary WTI. So that's the oil. Today we'll be talking about some of the items that have actually come up from the media. So questions, last video I was talking about questions that I've gotten from listeners and viewers. And once again, I thank you. I appreciate everyone for listening and viewing solo on this video as well. Thanks for listening and viewing. But we're talking about Intel, right? Let's say, not just Intel, let's say we're past the building blocks. People want to know what they should do, where they should go. And you've established your emergency fund. Your emergency fund's fully funded. You've gotten your debt under control or hopefully completely eliminated. But you don't have to have your debt completely eliminated before you start investing. But let's say it's in the process. You've looked at your retirement accounts, as we mentioned before. You got those optimized. Perhaps you're ready to start making some trades yourself, right? Let's say you ventured into something like Intel. So I'm going to share my screen here again. And let's say we went to Intel. Intel stock just hit a record high again, right? Intel's been a crazy, crazy move inside of Intel here lately. I was speaking with Samuel Brink. Shout out to Sam, Business Insider. And one of the things that we were talking about on the morning of Intel's release, that's when it actually accelerated a little bit more, was how crazy the move was, parabolic the move was. I'm sure right here, just show you the screen here. This is the article where we were talking about Intel here. So just scroll down, right? So, and this article was back in 2 weeks ago. It's set up there 2 weeks ago. And it was on Friday. Samuel reached out, gave him a call, sent him some information, but Intel stock soared. So say you had invested in the stock, and Intel was like $20 a year ago before the U.S. government got involved in. So let's say you invested in this stock or any stock kind of similar to it, because we've had crazy runs in the stock market here. Parabolic runs, just historical bull market going on right now. So let's say you invest inside of Intel and you're still in there, right? And you've seen this stock go from $20 to now, I think today it was like over $132 a share, right? So you just see Intel stocks continue to grow. You're looking at this revenue. And once again, this is not investment advice. This is not for anyone to just go out and say, I'm going to go buy Intel or I'm going to go buy whatever kind of stock because I saw it on this video. This is a literal example we're going to walk to and just talk through some things. Intel is a great example for what could happen if you have a stock that goes up a lot. Because that's what we're seeing right now. We're seeing stocks that are going parabolic. And we've seen it for the last few years. So here, Marcus Sturm, Senior SME Managing Principal at the ABC Squared. Like I said, wasn't surprised by Intel's smash earnings. Intel was set up for success. It appears that, they are the American first chip maker right now. We've seen huge investments into their company over the last few years, even beginning with the CHIPS Act back under President Biden administration. They've had plenty of hiccups. Oh my goodness, they've had so many hiccups. And now we're seeing new leadership come to fruition, right? So if you had an investment thesis, say you thought that Intel was going to go up, or let's say that you thought that Google last year was going to go up. There's stocks like that this year that you may invest in, but they can explode and you could have these type of oversized moves. IBM, there are just a lot of stocks that had these type of moves in the last year. NVIDIA is going crazy again. But Google's pressing NVIDIA, for the largest company in the world. But like I said, you look here and it's just talking about what the CEO said, actually, the next wave AI, closer intelligence to the end user, and they use foundational models, inference for agentic AI. So when they say agentic AI, that's like an AI agent that can do things for you. This AI is doing more reasoning and not just coming to conclusions, but it's helping you find solutions. So people want to see the return on investment side AI. And this shift, as I said, is significantly increasing the need for Intel CPU and wafers and advanced packaging offers. So Intel has slid right into a perfect spot at this point to take advantage of this movement where the government has, and I think it's mentioned in this article, maybe it's not, but the government made an investment in Intel last year. We've seen other companies make investments in Intel. What pushed Intel higher to as recently as Friday was an announcement with Apple. They're going to do more work with Apple, which was also a call in an article from last year. I'm not going to pull that up because that was last year, but some potential partners for Intel, Apple or NVIDIA, things that just made sense. But at the time, Intel was in a position where it was really a dumpster fire inside that company. People didn't really want to take it. People didn't want to invest inside that company or buy out that company. But the U.S. government invested in it. NVIDIA also invested inside Intel. Jensen Huang's made billions of dollars from the Intel investment since NVIDIA's investment inside of them. So that's another thing with NVIDIA. They invest inside of a lot of these companies. So it comes back to them. Some say it's circular, but when you see returns like this, I mean, it's just kind of the nature of what it is. Once again, let's say that you have invested inside of Intel, right? And now here you are, you sit with this Intel stock. It's ran. Maybe you've even moved. Maybe you were just, you've moved to a high net worth individual. You know, times have changed and you just increased your net worth. Things change when that happens, right? Once you get to these points, people start worrying about different things and different perspectives. The other thing was a Wall Street Journal article that I was featured in where we talked about high net worth individuals. How do they manage their wealth? So let's say you happen to make a lot of money in Intel. And this doesn't even have to be, shout out to Lauren Nowatzki, but this doesn't even have to be whether or not you just became a high net worth individual. If you're gaining, and here's some things for high net worth individuals, $1 million. But these are the things, right? You start looking at preserving your wealth and legacy and sometimes more complex strategies, but taxes are huge. Estate planning, people want to know where their money's going, right? They want to know, they want control, they want protection, because once you start increasing your net worth, people somehow find magical ways to see you, right? So people, high net worth individuals, people who have come into windfalls of money. And I went into that a little bit in the last article or last video that I was on, and where we were talking about the Broke series from ESPN's 30 for 30. In that series, we were speaking where it was looking back, and that came out in 2009, so it was 17 years, and it coincided with this bull market. When you have that where you have that where they match up together, 17-year bull market and the 17 years after broke, they have my portfolio in there. It preached diversity pretty much, but you can go back and check out that video if you like. Another thing, so like I said here, like I told the Wall Street Journal, both Wall Street and Main Street seem to be coming together to take more look at what they own and what they're actually investing in. That was the thing that we've noticed we see people coming together just to see, what do I actually own? Especially with this private credit that we're hearing lately and all the worries in private credit. We've seen so many worries inside private credit and the illiquidity of private credit. I actually have a few videos on private credit on the channel as well if you want to check it out, private credit, private equity. But even tying back to that 2009 ESPN 30 for 30 Broke series, you have the private credit, which was suggested inside there because private credit serves a purpose. Private credit serves the purpose of, in theory, it should be a diversifying element inside of your portfolio. It should also help with sustained returns, as they're usually the higher risk for higher returns. One thing that we did notice is that inside of that portfolio, the private credit performed not as well as the stock market, but like I said, the 17-year bull run in the stock market has been historical, but it did provide steady income. Other things inside that portfolio were real estate and also alternatives. So we've seen gold and things like that have great returns here lately. But like I said, people have been looking at where they're invested. That's been a big move that we've seen. We've seen people go back and look into where they're invested. And also what a lot of people don't realize is that you may be a Henry, right? So you may be a high earner, but not rich yet. And you're in the accumulation phase. You don't know what to do. So this may be the stage you're in, maybe with some stock. Maybe you work at Intel. You're working on these IPOs. They're about to come out. We just saw where one of those companies allowed their employees to sell a lot of their stocks pre-IPO. So some of those folks maybe, a lot of tech companies and startup companies have people who they gain a lot of money from company stocks, or a lot of people don't realize that, like, if you have RSUs that come into your compensation plan, that those actually count. Those taxable income to you as well. So it's just a lot of different things that can increase your income, and there are different things that you can move about with it. Let's see what else we were talking about. So it just goes in some of the different ways. We were talking with the Wall Street Journal here, tax loss harvesting. I'm never really a fan of playing on, losing money or in taxes, but that does happen. And that's definitely a strategy that can work. So trust, one big thing about trust is trust really give you control. People are really concerned about control, where things are going, where they're going to go. The trust will help you with that. Real estate, like I said, so even back then, real estate was mentioned, but now real estate's always been something that helps with your portfolio, as you see, diversify inside your portfolio, and then charitable giving. And that's another thing, the Trump baby accounts that just came out. So, and people have 529s, there are all kinds of accounts that you can make donations into. One thing with the Trump accounts that just came out, and I'm only speaking of them again now because they're about to go live in a couple months, and they just spoke on the possible inclusion of individual stocks where people can give them away inside of something like a donor advisable fund, a donor advisor fund. So if you have stocks in there, and then they could give them away, and the person giving them away will receive a tax benefit. The person who gets them probably will catch them on a step-up basis, so their cost basis won't be as much, even though it'll be a lot by the time they're 18. But hopefully it grows. But those accounts were originally set up to track U.S. index funds, so the inclusion of individual stocks. And that part, the Trump baby accounts were signed into law, so that's codified. So that will require a little bit of legalese and movement to establish that, maybe an executive order or something. But if they are allowed to put individual stocks, charitable giving, and donations. And then once again, so one of the biggest concerns with estates planning, taxes, where your assets end up, and who gets control of it. And this is what people don't realize either. Your money is going to go somewhere. Maybe it's going to go to someone you don't want. Maybe it ends up going to the state. Maybe it goes to the people you actually want to go to. Maybe it goes to debtors. That's not the people you want to go to. All that's when you set up your accounts, make sure that you have all this stuff planned out in advance, especially if you're coming into new wealth, you're having life events. Maybe you just had a baby, or maybe you just changed jobs, or maybe you just lost a job. There's a lot of different situations where you need to reevaluate your personal financial situation. So like I said, and if you've gone into high net worth individual, or if you've stepped up to a higher tax basis, this is just something that you want to look at and establish. So, and then once again, strategic estate planning, so financial advisor, like myself, financial advisor. Then you also want to have an estate lawyer for that, attorney for that. So you get a greater number inside there. If you have a business, that might help you if you want to make sure that you have your business make sure you have your business transfer plan for once you pass away. Then if you want to transfer wealth across multiple generations, high taxation, financial and other private information out to public eye, because that's a big thing. If stuff goes through probate, or if you have it just like in general world, people can see like what you own, who you owe debt to, et cetera, et cetera. But if you have it in trust, that kind of keeps stuff private. So people do actually want trust sometimes just for the private part of it. And then contributing wealth to a charity or profit. People want to contribute contribute their wealth to a particular fund or a particular cause. Then that's one thing you can do with trust as well. Big thing to think about trust also is that it can be revocable or irrevocable. So irrevocable means you can't change it once you set it up. It goes into effect on some type of event. So let's say it goes into effect when the person passes away. When that person passes away, whatever's inside that trust happens. So if you set up an irrevocable trust and your life situation changes, like say you're married and you're no longer married to that person, and it's going to be, few things are impossible, but it'll be really hard to change it, right? Whereas if you have it set up as a revocable trust, you can go in there and make changes to it, the person who's in charge of the trust. So, and then another thing, just think about with your trust. So you have your trustor, your trustee, and your grantor inside your trust. Just different things to think about. Who's getting it, who's giving it, and who's in charge of making sure it goes where it's supposed to go. So like I said, you can have your family trust, goes with strategic giving, gifting. And a big thing that people, I'm going to say it here for a second. People initially were setting up trust because of this reason right here, the lifetime exemption limit, right? It was like $1.5 million, $3 million, like less than a decade ago, but now it's up like $15 million and $30 million for filing a married filing jointly. So that number's increased a lot. So if that was your reason, maybe you don't need a trust. But if you're at that level of income, then you probably do need some type of trust. If you need to protect those type of savings or wealth that you've accumulated through your life. And then business succession plan, like I was saying. So different standards, just different life. There was a time earlier where the high net worth individuals were collecting more jewelry and art and cars and just trying to diverse outside the stock market. But we've seen here lately that the stock market has come back really strong. We see this K-shaped economy where the top percentage, and when I say top percentage, I just mean like income earning wise. Not all people are equal, in my opinion. Please don't. Let's not go down that road. I digress. But money doesn't make you a better person. It usually makes people worse, actually, but that's a whole nother story. So, and then, do high net worth individuals need different financial advisors? Sometimes, yeah. I mean, probably not robo-advisor. I wouldn't advise a robo-advisor unless you major income in investing. But yeah, you probably need someone who's going to spend a little bit more time paying attention to what you do, to your investments, and also to help you with the mindset that when you may want to sell or you may want to buy, when you should be doing vice versa. You should be buying, you should be selling. And so it just depends. But as your assets increase, it can decrease your returns. So once again, remember, so we got this intel. Maybe we jumped into a high net worth level. Like I said, we're looking at articles that I've already talked about, articles already been included in my actual quotes, because people sometimes want to know, like, what do I think? What they say, maybe you talking platitudes, I think is what a guy told me. And I was just like, if you ever want to see what I think about a subject, it's on the internet probably, especially if it's like a financial subject. It's out there. I've been quoting on a lot of things. So now we'll look at what happens, right, as your financial priorities grow. And this is an article by Chris Adams. Shout out to Chris Adams, edited by Jenna Cavler-Whedon. Sorry if I said your name wrong, Jenna. We'll go bacon rate. So inside this article, we just talk about, and this is something, the same thing that we were talking about earlier, and there are other experts quoting inside. I hate even saying that, call myself an expert. There are other people quoting inside of this article. So I won't speak on what they said, but one thing is you definitely go from, it says, I can't say definitely, but this is there. You go from defense to offense, right? Lower incomes, your priorities are stability, but as income grows, your priority must flip. And this isn't me. This is another advisor speaking. Once again, I'm big on taxes, so I'm talking about taxes. Just make sure that the added taxes, they become more concerns. You increase your earning, you see more. And there are a couple of different things you need to know, right? Does this push you into a new tax bracket? If you're trying to get into a Roth, can you still make your Roth conversion? Income pushed you into different avenues to save, or maybe there's a different strategy that you need to take. And then even estate planning. So once again, it goes back, and this one's Brandon Gregg right here. G's Greg, total in his name, and he's saying the more income you have, the higher the legacy you may end up building as assets grow. Plan accordingly to do estate plans to protect your assets and legacy for now and in the future. So it's just, the same things as you grow. So now you've had this Intel stock that's grown, and this was March. That Wall Street Journal article was January. So as we see these things continue to grow, and like I said, we've seen Intel stock, maybe you had Intel, now you've grown. A lot of Americans have been worried a lot about in this protection phase. We see a lot of people who've grown. Another thing that helped with the income was the One Big Beautiful Bill Act. So we'll take a second. It's supposed to be larger tax returns for people. I was actually quoted in Economic Times where we were speaking about this. Trump's Big Beautiful Bill. What could it mean for your tax refund? We're through tax season, but let's say you had a great return with your stock picks. Because remember, we're past the basic building blocks. You had great return with your stock picks. Your emergency fund is on. It's just running. It's great. It's set up. It's established, and these investments are growing, right? Some of the things people were looking at, the child tax credit, you got to excuse these ads that are popping up. And once again, there are other people quoted here, tax bracket updates right here. Quoted, most Americans are expected to see some level of their taxes being cut, which means you will get a tax refund or a larger tax refund, but not everyone will receive a tax refund, even if their taxes are lower. And I think that's something that we saw a lot of that actually played out. People were their tax return. So also tax breaks, so they can be regressive, meaning people in lower tax brackets may not benefit as much. And, the bill adds structure. I was talking with Kevin Thompson, who's an enrolled agent, EA, dug real deep into the bill as well. That episode, part 1, was out this week. So if you want to hear more about that, but he goes deep into it. But like I said, the bill mostly it adds structure because there were a lot of things inside the bill as far as with the taxes, whether or not they were going to be extended. And, depending on what side of the aisle you're on, you have people saying it's going to be the largest tax hike in American history, or it's going to be the largest tax cut in American history. So depending on your view, it was either going to be the largest tax increase or the largest tax. So either the largest tax hike or largest tax cut in history. Just depends on your point of view, I guess your political point of view. The numbers don't lie, though. Another thing that we noticed is that a lot of Americans were not seeing the amount of returns that they were expecting from their 401ks, from their tax refunds this year. That was a big thing, especially based on maybe where we saw and where people were expected. So you've grown your income. You've got the basics and the building blocks down. Now maybe you've moved on to the point where you are looking to lock in the gains. You've moved into the high net worth situation where We are protecting your gains. Have the tax cuts, tax breaks, whatever it may be. Now we're sitting here with the stock market at all-time highs, right? S&P just closed above 74 for the first time ever. Back in February, the Dow had just hit over 50K. 6 things to do with your money right after it hit 50K. That was a question that was asked by the media, like I said. So we're going back and just looking at different questions and things that we've talked about already. One is stay steady. That all this isn't my advice. This is this is Taylor Kavor. I won't name everyone, but just know that I'll just mention it when it is mine. Another is to start investing, right? So stay steady. So keep investing. Don't make emotional decisions. And if you haven't already started investing, it's suggested here by Miss Melanie Mousson that you start investing. I said, you may want to consider locking in some gains at those levels. So at those levels, like do not blink at the 50K because the market bounces around. The market's been bouncing around, but the market like really bounces when it hits levels like that. Sometimes you see like 30, 40, 50,000. Once it hit it, it came back down as resistance. It'll eventually get back through that 50,000, but it'll bounce up. So you have to lock in the gains. If you have gains in the market, maybe look to lock them in. And I don't mean take all your money out of the market. I mean lock them in perhaps by rebalancing. You can sell some of those winners and keep the profits or move on and reinvest in some other positions. That's some of the ways, because this market's presented a lot of opportunities since we've had the start of the war where people can find other opportunities to invest. It doesn't just have to be AI or the Mag 7 or per se, even though we've seen a lot of returns from 5 companies. Then you say protect your assets, right? Once again, protection. As your wealth grows and as your life grows, you want to continue to protect those assets. That's something big that people look for. And then diversifying your assets, which just ties back to what we mentioned earlier. Even at 50K level, we've seen a lot of concentration inside the returns here, but there's concentration risk as well. If one of these companies misses earnings or pulls back capital expenditure, something to that effect, we can see a swift move back down to the other side. And then consider your overall playbook, of course. So just think about where you're at and where you're at in life, where you're at with your budget, your investments. Where do you see yourself going? Where do you see yourself at the end? You got to begin with the end in mind. So, and once again, like I said, don't blink. Do not blink. The 50K level is one that the market's bouncing around. Same thing when it was at 7. I don't know if people remember, it went back down and we hung around in the high 6s for a while. We even got down to the low 6s before we ran back through 7,000 here recently. We'll see if that holds, but that's just another thing for investors to look at. So with the 50K, we've seen you grow, we've seen your investments grow, and now you've reached this 50K level. Another thing that investors have been concerned about lately is having enough money to retire, and different ways to do it once you are actually retired and once you've reached your level of retirement. How can you go about maintaining your level of your standard of living that you've already established, exceeding it, meeting the goals that you've worked so hard to reach? Like, how can we do this as people in general? Because we don't work hard to not be able to enjoy the fruits of our labor. That's not why we work. I think I'll add to the end of this video, we'll add the building blocks. I keep mentioning that people should already be past the building blocks. Not should be, but maybe if you're already past the building blocks and you're watching this. But if you're not past the building blocks, at the end of this, we'll have the building blocks that you should check out. It's about 20 minutes. You can just check out and go see. And that's where we talk about emergency funds, the purpose of emergency funds, importance of emergency funds. Also, you got to have balance. You got to have budgets. You got to have a mindset shift. You got to figure out a way to eliminate debt before you even get to this stuff that we're talking about with these investments. Before you even worry about the Dow Jones hitting 50K, make sure those retirement accounts are set up the proper way, pre-tax versus after-tax. You're contributing up to the match. So just things like that. These are different things that we need to establish. And like I said, I'll put that at the end of this video as a long continuation of this video, just so people, in case you want a refresher on the building blocks, if you want to go back and take a look just to see where we're at with the building blocks. All right. So once again, here we are. We've accumulated this. We've made this move with Intel or whatever stock it was that you did that grew this windfall of cash. And once again, it could be a growth in wealth that you just didn't expect, and now you're not prepared to do anything with it. So here is another article from last year, some strategies to maximize your 401k balance. It's actually another article, like I said, that I'm doing look backs for articles that I was actually quoted in. This one right here was in U.S. News and Money. So 10 strategies to maximize your 401k balance. And once again, this is mine. We're all about actionable steps. So I want to give you some actionable things that you can take a look at. People always ask me, like, what can we actually do? These are 10 things that you can look at doing. Not all my suggestions, and everyone is at a different stage, different place in retirement or coming to retirement, but here are some things that you can look at. And we'll just start, some of the big key takeaways. Know your vesting schedule before you leave a job. That moved a little quick. Uninvested funds may be forfeited. Max out your contributions. Check out, see what the Roth looks like for tax-free income and estate planning. Watch the expense ratio of funds your own in the 401k. I think that was a point I made, was the fees, and diversify investments by factors including asset class, sector, and tax treatment. So let's just take a look at some of these ways here. And you see right here, 10 ways to maximize your 401k. Save more than your employee's automatic savings rate. So a lot of 401k plans, when you go in and set them up, they'll start you at a level, but they'll automatically increase it, maybe 1% every year. But this is saying, right, so let's just go ahead and start at higher than that level. And in general, like I said, and I put this in the last video, if you want to find a baseline 10 to 15% total, that's what you can save. That's a good level that you can start at, begin. And a thing that you notice is once you start saving, and it's going to be like working out. So you'll feel the pain at first, but once you get through that initial pain, you'll see the growth, and you'll want to do more. You'll want to save more. You'll want to invest more. It's just cause and effect. Get that 401k match, stay until you're fully vested. So what that means is sometimes when you work at a place, you have to work for like a year before maybe the 401k match kicks in. That's not vested, but that's to get the match. Or maybe you have to work a year to get whatever you put into your 401k. And sometimes those things will come in to be fully vested. Maybe it'll take 5 years. So you'll get 20% of it the first year, 20 more percent of it the second year, which would be 40%, 20% more the third year, which would be 60%, 20% more the fourth year, 80%. And then by the fifth year, it'll be 100% fully vested. And that means whenever, even if you leave that place, the money that you've put in the vested amount is yours to take. If you're not vested or fully vested, you lose some of those benefits. Maximize your tax break. So that's how much you're going to put in pre-tax versus after tax. And then as far as when you're retiring, make sure that you have it set up so you're not paying Uncle Sam a huge amount of money in taxes as soon as you retire. Diversify with the Roth 401k. If you put it into a Roth, ideally, in theory, not even in theory, and ideally, if you put it in a Roth, you leave it in there until after age 59 and a half, and you've left it in there for the expected amount of time, over 5 years generally, you can take the earnings out, growth-free or tax-free. What your contribution amount, whatever you contribute in there, you can always take that out. But you will pay a penalty. You may pay well, if you're already in retirement age, you won't pay a penalty for early withdrawal, but you will pay taxes. But that Roth, that's one of the good things about Roth, is you can potentially set up where the money you put in, but you'll pay taxes when you put the money in, converting it to Roth, but that money could potentially grow tax-free. It will grow tax-free. Don't cash out early. Put that 401k money or whatever kind of retirement account you have, put that stuff away and forget you have it. Just let it grow. Don't take out money if you don't have to. Sometimes you have to take out money. Sometimes there are good reasons that don't cash it out, though. Cashing out means taking it all the way out. But sometimes there are good reasons to take out money. Sometimes life hits you with something hard, extremely hard. Sometimes you are buying a house and you can use your 401k as part of a down payment, but that's as a loan that you can pay back. You want to pay back, take the loan from yourself. You hear people all the time talking about taking loans from themselves or being their own bank, but the 401k is kind of one of those things that you can do and use that for your down payment as a home. A rollover without fees. So yeah, some of these places when you do a rollover, if you have an old 401k and you go into a new account, a new provider, they may charge you a fee to do it. Minimize fees. So like I said, and I'll scroll down and show you, but that's where I was talking about these 401k plans. People think my 401k, I don't have any fees inside there, but if you look at the actual funds, there's a fee. Diversify your assets, and then remember that your required minimum distribution is going to come one day. Another thing with Roth, if you put inside Roth, that helps with the required minimum distributions. You control it more. Like I was saying in the beginning, you got 3% generally with most 401k plans, but sometimes they're different. And if you can do more than that, especially to start setting yourself up, obviously financial advisors, find one, especially from the estate planning perspective, get your 401k match. Stay until you're vested, so leaving early. And I'm just not going to reiterate everything I said. Maximize your tax breaks, but I do want to point out the part where I was quoted. Then you have tax breaks, so like the government's way of telling us all what is important for society. That's not me. That's a management coach over at TIA in Charlotte. Diversify within Roth 401k was a suggestion that don't cash out early. And then here I do remember, so minimize fees. Find investment options with low costs. Stocks do not have fees, but ETFs, mutual funds, and the custodians who hold your funds do. Read the fine print. Read the fine print. And then diversify your assets. I say a lot of Americans are worried about running out of money. That's one of the things that a lot of people seem to be struggling with. I don't know if they'll have enough in retirement, but you take these moves and they'll help with some of the volatility. So those are some actionable steps that you can take right there, 10 actionable steps. And of course, there are plenty more that you could take. Let's scroll back up to the top. Just want to read that list of 10 again. So once again, 10 ways to maximize your 401k account. Save more than your employer's automatic savings rate. Get a 401k match. Stay into your invested. Maximize your tax break. Diversify with a Roth 401k. Don't cash out early. Roll over without fees. Minimize fees. Diversify your assets. And remember required minimum distributions. So, and these are things that you can take a look at this stuff today and see where you're at, where you fall, where you are in this whole spectrum. So actionable steps right there. Just remember different things that you can do. Another thing that we've been talking about, like I said, people worried about retiring, not having enough to retire. People have been worried about the debt, big concerns around the debt here lately, whether we can service this debt. The debt recently reached 39 trillion, but that's increasing about every 150 days, add another trillion or so. The thing with the debt is the servicing of the debt. That's about $160 trillion. People aren't really taking into account how much that cost is going to trickle down to Main Street. So when it comes to debt and how much we're paying for the debt, that can have an effect. I want to look at this Economic Times article. Where we talking about the one big beautiful bill. So like I said, this session, we're talking about if you got this income, just trying to answer questions and user questions that I'm getting from journalists. So I'm responding to those questions as well, just saying if you were to come into a influx of income, different things, different moves, different strategies do. And we're basing off of, and once again, these are hypotheticals, but I was quoted featured in an article of Intel. So say you were invested in Intel, which just finished right under $130 today in closing and trading, and you invested in Intel at $20 or something like that, because that was realistic where it was, or even if you got it at the beginning of last month when it was higher than $20, but it still had a ridiculous move to the upside. So we've talked about if you've got that money and you start to move up into a high net worth or higher net worth. Because if you invest enough in Intel, or even a little bit, you may have changed the tax bracket. Talked about tax implications a little bit as far as that goes. How high net worth individuals want to protect what they have and worry about taxes. But this stuff always also plays down into us on Main Street. It's not just for the quote unquote wealthy or rich people. So once again, we're all about actionable steps. This is an article where we're talking about the ways that retirees should adjust their investments amid the Iran war. We look here and we see this was just a few weeks ago, back in April. This was written by Chris Adams. Big shout out to Chris. Chris does some good stuff writing. So that is, very sensitive, volatile area that has something to do with the war, i.e. oil, or something like that right now, or something that could be disrupted. You may look at ways to lower your risk. These aren't all things that I've as long as with lowering the risk in your portfolio, maybe you should look to move into some income producing investments. That may be a good decision. Even in retirement, you still need stuff that produces income. You want maybe a low cost ETF or maybe even an index, one of the good ways to have some skin in the games if you're so worried about everything inside the market right now. So you don't have single stock exposure. You can maybe smooth it out some with an ETF or a fund or mutual fund that takes the total market. So it goes up and it goes down. You'll have to deal with that volatility of a single stock or a single sector, unless you're investing in a single sector ETF or a single sector index fund. But just a general overall fund that captures most of the market can help with that, especially if you're retired. Don't rush into quick decisions. This is another advisor's advice. So it's important for retirees not to make any hasty decisions when it comes to their investments. And that goes for not just retirees. That goes for anyone investing. These are hard-earned money. This is your hard-earned money. Take a second before you spend it, right? Think before you spend it. We're not saying don't spend money. Of course, you work to spend it. You work and you use money as the tool that's meant to be used for. So for someone who's already retired and drawing on their savings, the concern's a little different than for the younger investors. Exactly. And that's Taylor. So then another option we see, you consider locking in gains or consider keeping extra cash outside of your investments. So why would you want to keep extra cash outside of your investments? There are a few reasons why you want to consider keeping cash outside of your investments. As they point out here, having some cash outside of investments, especially for a retiree or someone close to retirement, provides a little bit of breathing room. One of the big things, as I've mentioned a lot of times today, is that people who are close to retire or are retired are worried about running out of money or not having enough. So having cash, even though you may have a fixed source of income coming in, a little extra cash or outside cash can provide the breathing room that some people are looking for and just help them with their SWAN, sleep well at night plan. That's what we want to help you create, a sleep well at night plan over here at the ABC Square. But we want people to understand this, even in the wartime that we have going on, because we just saw it from the end of March until now. There were opportunities to buy in. There are probably still opportunities to buy as the market goes higher, but the market will come back down again. But it'll come back up again. That's just kind of the nature of the market. That's why markets work better when you focus on time inside the markets, time in the market versus timing the market or trying to time the market. And then once again, lock in some gains. Like no one's ever went broke taking profits unless they just spend it all. That's a whole nother part of it. But if you weather storms and you need cash, you can lock in some of the gains from this recent rally, right? Not all, but some trim. Not all. I'm not saying get out of the market. I'm never going to really tell anyone to get out of the market. Let's have a deeper conversation if you think you need to just get completely out of the market. But as I mentioned earlier, you can rotate into other sectors. There'll be opportunities to buy some stuff that you thought was maybe too expensive before. But trimming some of your winners and guaranteeing profit is rarely a bad move. That's just one thing I've realized. It's rarely a bad move. So here we are, we're sitting here just to reset where we're at Main Street. So we've increased our cash somehow because we've made it past the building blocks and the basics. We've talked about some of the tax problems that you may see, what happens as you move up in income, how people want to protect their money as they move up inside the income levels, some of the things that attack people's incomes and some of the concerns. Oh, also 10 steps that people can use to increase or maximize their 401k, whether that's retirement or right now. And then also that we took a look at 4 ways that the retirees can look at 4 ways that retirees can adjust their retirement accounts amid the Iran war. So we have a war going on right now. And those are just some of the steps that they could take. It's been a full session, but there's still a little bit more we want to talk about today. I just want to thank everyone for listening so far. Everyone over in Japan or Vietnam or South Korea or Argentina, especially all my folks over here in America, the United States, Europe, the United Kingdom. We have people all over the globe who are actually sit and listen and watch this stuff. So we appreciate it. Hopefully it's making you a better investor, better at whatever it is you're doing, helping with financial literacy. That's a big part. So if you're finding value in this, hit subscribe, hit like, share this with someone. That's going to help grow this channel, help spread the message. Because, in my daytime job, I actually have a financial planning firm, the ABC Square, but this is different. This is to help spread the message, to help let the world know. We have crazy times going on. We see the stock market going up. Oil prices are going up. Like I said in my last video, that those things probably shouldn't coincide right now based on what we have going on. Geopolitical tensions. I think today the president said that the ceasefire is on life support. The ceasefire or the negotiation talks are on life support. So there's still a lot going on. I just want you to stay informed. Hopefully we can help you stay informed. Hopefully I can help you with your budget. And check out video. I got some Monarch Money tool that we can help you with that you can check out if you want to try it. There's a link that I can provide you with. Free link. It'll be in the description. Full disclosure, if you do use that link, or if you use any link that I provide, you see we're using some Riverside stuff here that we record on. I also have a link there. Riverside link is for 1 free month. Try it out if you want to. And then the Monarch Money link is for 50% off the first year or a 7-day free trial. If you use either of those links, I may be compensated for those links. So just putting it out there, just so you know, full disclosure. But this is money mindset, Main Street meets Wall Street. It's all tied in. Big shout out to all the people who are subscribed to the Wall Street South Journal. I do really appreciate the 1,300 listeners and readers who've checked out even the last newsletter that came out where we're talking about the Broke series. That's me taking a few minutes to give a shout out and thank y'all, and really appreciate everyone who's who watches, who listens, who participates in the discussion. We covered technical rotation and the tactical defense. We laid out 10 steps to optimize your 401k and 4 pillars of protection for navigating this conflict with the Iran war. But as we close the ledger tonight, I want to leave you with the most important part of this broadcast. Everything we discussed, the Intel resurrection, maybe from the Business Insider article, the retirement warnings in Newsweek, and the high net worth standards in the Wall Street Journal. It all relies on one thing. It relies on you. You take these steps, but you're not open to operate with, you're still stuck in the Main Street mindset identity. You're fearful, reactive, and addicted to the pursuit of the next big thing, FOMO. You'll eventually override your own best system yourself. So just remember to stay the course. You can outperform your own self-image. This, you have to see yourself as the strategic partner to your wealth, not a victim of the global friction we see at the Strait of Hormuz. We started at Strait of Hormuz. We went through the walkthrough of gaining a windfall, perhaps from Intel. We talked about the taxes. We talked about the implications. We talked about the worries and fears of people close to retirement, steps to take to improve your 401k, and some steps that you could possibly take to help yourself right now in the Iran conflict. Once again, this stuff's not investment advice, and each person needs their own personalized advice. $39 trillion debt clock is still ticking. Those tankers are still anchored. But tonight you have a little more knowledge. So you don't just watch the video. You can take a look at your 401k when you have a chance this week. If you think about adding crypto or private equity, take a look at the loan video that I have on my channel. Protect that roster. If you're a retiree, take a step to make sure that maybe some of those 4 pillars work for you, or maybe they don't. But make sure that you're not set up in a zero scenario where you can lose everything. Make sure you're covered. And then join the community. If you want this level of dissection, we do a lot of stuff pretty often, put stuff out. You can subscribe to the Wall Street South Journal on LinkedIn. 1,500 plus professionals who've decided that the Main Street and Wall Street finally need to meet, and they're going to meet on our terms. We're building a table, right? You can give this 5-star review. You can subscribe to YouTube. There's so many things you can do, but the first thing you do is just get that momentum going, one step in front of the other. And if you're listening to this and you're like, where are those building blocks? We'll leave the building blocks at the end of this as a bonus. I'm Marcus Sturman Sr. Keep your head in the math, your heart in the process. Main Street, heart meets Wall Street smarts. I'll see you. Thanks for tuning in.